Powell, in the Brookings Institute interview just about 2 weeks ago, he explained that there will be no Paul Volckering. So he basically broke down inflation to three types of inflation. The one that the Fed can handle, supply chain inflation, and that's, in his mind, that's a check mark. Then you have rental and shelter, and he believes that it's a lagging indicator, but it's starting to get under control. And then the third one is that we are missing about 2.5 million jobs in America because of the retirement boom that happened during the pandemic and people not coming back. And he doesn't feel like that's something that the Fed can help. And therefore, I think that his view is that we've done everything we can. Now it's about government policy, helping with new housing permits, incentives for businesses, and regulation, fiscal policy basically, and not monetary policy. They do believe that the balance sheet is too large. They'll keep reducing the balance sheet, and I think that they will hold in the next few months. But I don't see any reason, either politically or monetary one, to start cutting rates. So if by pivot you mean cutting, no, I don't see that. If by pivot you mean just pivoting from 75 to 50 and 25, I think that we're gonna see that for sure. And to me, the idea is that what happened in general is that in 2020 with the pandemic, the zero interest rate culture got intensified to 1,000,000. It's almost like you play a video game and then you have these turbo or nitro where you can pick it up and then you're racing. That's what I think happened, and it raced too fast, created inflation, created too much hiring in some sectors, and a lot of retirements and quitting in other sectors. And as you open it back up, it doesn't go back to the way it was, which is what Powell's romanticizing about. I don't think that's the world we are entering in, and I think that ultimately we are not in a classical recession, because it's not mismanaged funds that got us here. It's a slew of other problems. So what I think needs to happen is more of what's happening right now, which is just a reset of expectations, a reset of risk, a reset of the jobs market. I think we're a few more months until we get to equilibrium, and at that point, it's gonna feel like a very slow discovery of the new economy that we're in. So definitely, I don't see this as a 2008. This is going to be classic 10% plus unemployment and all that. That I don't think we are in that environment at all.
So taking that thesis and looking ahead, how do you see the impact of Fed policy affecting the precious metal space specifically?
Okay, so 2020, March till August, you saw a reflation trade just like in 2009. Gold went up 36%. I think silver doubled in a matter of a few months, and interest rates bottomed at 0.5% for the 10-year. That was like insane. And then the bonds market obviously started to price everything in before everyone else, because you're just the smartest investors over time. 2021 was the year of denial. But basically the Fed says this is transitory. The market buys it until it doesn't buy it anymore. And then 2022 and that's why precious metals did not run in 2021, because nobody thought that this is a permanent situation. 2022 it was the flip of that. In other words, the Fed says, oh my God, we are way behind the curve. We are going to rain down on this. And so the market starts to price in deflation and starts to price in that the Fed will win. This is going to be a win for the Fed. And so precious metals didn't do well. But now we're at a point where we had peak hawkishness and also a realization that no, we're not going into any deflationary environment at all. So to me, it looks like precious metals have already carved the bottom. And in the next few months, as we see what the Fed does, in other words, is it going to be a terminal rate of 4.75? Is it going to be 5? Is it going to be 5? That's going to dictate how high precious metals will go. but I think that silver specifically is already in a bull market, and gold is forming that bull market. And tactically, we are in a bull market for precious metals.